And overall, it looked like a relatively clean report, Nicholas. Was this what you were expecting?
By and large, yes. I mean, there's a few variances with some of the revenue numbers based on what I saw in my third quarter expectations, but it was a good quarter, and they kind of signaled that they were going to do well with the industry slowing its capacity growth.
It's kind of interesting. Some of the commentary that we saw in the press release, and I know we're still waiting on the conference call, they spent a lot of time, a lot of real estate in that press release, talking about the customer experience, updating kiosks, making the check-in experience better, new lounges at this airport and that airport here. I don't remember seeing that to this extent in past releases. Why are they highlighting that?
I think two reasons. It's competitive, so there are more and more, I would say, competing with Delta, and both of those are pulling away, in my view, from American in terms of their ability with the planes they have and the seating arrangements they have to really go after segmenting premium customers. And at the end of the day, if folks have money to spend on travel and can get from A to B on more than one airline, they're going to make choices based on these sorts of things. Where am I going to be waiting my extra hour here, or is it a comfortable experience? And I will note that updating lounges in your top 10 airports costs money, so we'll see how that shakes out.
Yeah, absolutely. United says it still sees full-year adjusted capex in the neighborhood of just under $6.5 billion. Analysts were looking for about $6.33 billion. You compared United with Delta. Delta is seen increasing, or says it'll increase its fourth quarter capacity by up to 4%. What are you anticipating for United in terms of its capacity increase, and what specific markets would that allow it to move into?
I don't have a forecast for 4Q capacity per se. I mean, my guess is it'll probably be very similar. I think one of my takeaways, and in general the way I view the industry, is that they're very interdependent, right? So United's pulling a good quarter here, partly because other airlines cut back capacity as well as United. And so as long as they're kind of following a similar script and following similar market signals, it'll work out. I think they're all benefiting from slightly lower fuel costs here throughout than anticipated, which allows them to lower prices without eating into profits, and that can stimulate demand. But so they're my guess is, I mean, they are tempering their capacity growth compared to what they thought they would be doing a year ago, but that's for the health of the industry, really. There's
a lot of questions, too, about whether it will add routes to its international destinations. It still, of course, has suspended flights to and from Tel Aviv indefinitely because of the conflict taking place there. How big a contribution are these international routes to its bottom line?
Pretty big. I mean, all of these big legacy carriers have meaningful international franchises, and some of those are some of their best routes. And they're in an environment where they're, let's say, cutting back capacity growth. They can be picky. It's also an environment where there's still short planes and air traffic controllers and pilots, and so they can, in a way, benefit from those constraints and put their capacity where it has the best return versus chasing sort of mediocre on a competitive route that in a more, let's say, permissive capacity environment.
So when we look at the airlines, the major U.S. airlines, that is there a way to differentiate? I mean, and I'm speaking more from the investor perspective, because we always talk about these airlines in a very homogenous way, and I understand the industry is just kind of is what it is between regulation and pricing and everything else here. It's hard to kind of separate yourself from your competitor here. Is there a way to do that, or is this just the world they live in?
I think there is, you could say, there's a little bit of a, I think barbell is the phrase people use in terms of, let's say, Delta and United in the U.S. for sure, and to some degree Air Canada in this North American market, being able to offer differentiated or at least premium things like lounges and seats and the way they package and unbundle pricing for cabins and so forth. And it's a little bit of circular logic when they say, 50% of our revenue came from premium seatings. Well, that's because that's the stuff you charge the most for, even though it's a minority of seats. Then the other side of the coin, which you've seen Southwest suffer from, and you mentioned, I think, Frontier earlier, is what I think of as the back half of the plane. It's been interesting to watch these legacy carriers like United. They're able to sell the back half of the plane at competitive rates to a Southwest. And that's been a price war here in the last couple of months and hasn't been pretty.
Yeah.
Of course, if you're United or Delta, you're happy you have the front half of the plane to essentially, make money on.
Yeah.
But in that respect, it's ironic because American had the newest fleet for a while, but it is not as configured for segmentation as United's and Delta's. And that's why I think these two are pulling away a little bit in this, call it premium experience or travel experience segmentation exercise. It used to be defined as business versus leisure, but those are the same people. And so now it's really just money to spend versus not.